Welcome to today's program titled Uncovering Environmental Opportunities in Your Book of Business. At this time, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session. For those of you who are logged into the web presentation, you are encouraged to submit questions throughout the conference by selecting the chat pod located in the lower left-hand corner of your screen. Then type and send your question that way. For optimal sound quality, it is recommended that you listen to the conference via your telephone. The phone number is 866-205-7531. Please do not forget to turn off your computer speakers if you choose to listen over the telephone. Look at the top left-hand column and click the speaker icon to turn the computer speakers on and off. If you choose to listen to the conference through your speakers and you experience any problems with the internet sound quality, please dial back in on your telephone. Once again, that phone number is 866-205-7531. I would now like to introduce your speaker for today's call, Mr. Bill Pritchard. Bill Pritchard is President and CEO of Beacon Hill Associates, Inc., a wholesale insurance broker and program administrator. For over 20 years, Beacon Hill has specialized in the placement of environmental insurance and other specialty coverages for agents around the country. Bill is a third-generation insurance professional and teaches pollution insurance classes nationwide. Welcome to the program, Bill. The audience is all yours.
Thank you, Sherry. I appreciate it. And thank you all very much for joining us today. We're very excited here at Beacon Hill about doing this webinar today. This is what we hope will be the first of several that we'll do over the course of the year and trying to address issues that lots of our agents have come to us with over time and highlight some of the things that we think are exciting and interesting and happening in our industry that might help you all be as successful in 2014 as possible. So one of the things we wanted to start with was some poll questions. We're going to do this a couple of times during the presentation today. And so I'm going to ask Sherry if she'd put these questions up on the screen for you. If you can just answer these when you have a second, I'd appreciate it. The question we wanted to start with was how you all typically learn about new available coverages, including environmental lines. Do you go to insurance websites and publications? Is it through discussions with colleagues, other agents in your agency? Do you go to your marketing manager, or is there some other way you do that? So if you could all just take a second and answer that for us quickly, I'd appreciate it. I think it'll just be a couple of seconds that we'll have the survey up, maybe 10 or 15, and then we'll move on and start talking about some other topics. I did want to reiterate what Sherry had said before about asking questions. There is a space on the left hand, I believe, of your screen where you can post questions that occur to you as we go through the discussion today. At the end, I'll read those and try to answer the ones I can, certainly. And there's no need to wait until the end to ask those questions. Just please jump in and put them down whenever they occur to you, and we'll wrap it all up at the end. So that sounds good. Just to give you guys some feedback, the responses we've gotten certainly are most people go to insurance websites or publications or talk to other colleagues in their agency. So I think that's an interesting feedback in terms of how people are learning new information. So moving on with the presentation itself, what I wanted to talk about today was really how you can look at your existing book of business and find environmental opportunities and why that's an important thing to do. We're going to go over that. We're going to talk about the types of accounts that have environmental exposures, the types of environmental products that you would purchase to address those exposures, how you apply for it, what premiums start at, that sort of thing. Just trying to give you a good sense of what's out there for clients that you already have. So we're going to start by talking a little bit about why bothering to mine your existing book of business. I think one of the most important things out there is realizing sometimes that the best customers you have are the customers you already have. An existing insured is someone that already knows you and trusts you, and it's somebody that you enjoy working with, that you have a good relationship and rapport with, and it's somebody who's actually purchased coverage from you before. I think in this business, new business is tough to get, and it's always a battle to to write new accounts, and once you have established that bond with your client, it makes sense to try to do as much with it as possible. And that's why I think some of the best opportunities for growth in the industry right now exist in business we already write. The other nice thing about mining your book of business is just additional lines increase revenue for a relationship. And I know a lot of agencies track what's the return on the individual relationship with an insured, and adding environmental insurance to that portfolio of coverage for that client is certainly a good way to do that. So I think it makes a lot of sense on a lot of levels. And I know in talking to agents over the years that they're always looking at new things that they can do for existing clients, and I think environmental is a natural addition to that group. Why round it out with environmental? Virtually every insured has some degree of environmental liability, and this is one of those things that you can discuss at great length. And there are degrees of environmental liability I think all insureds have, and that's something that we'll go into a little bit more later in terms of how big the exposure might be for a particular type of insured. But I think it's important to realize that everyone does have that liability and has that responsibility, and that very little of it is covered in traditional policies. Literally not a week goes by here where we don't have a conversation with an agent who talks about a client who had a significant environmental loss that they thought might have been covered by their GL policy or covered by their property contaminated debris coverage or something along those lines, and turned out to be a significant claim for their client that wasn't picked up by those coverages. So I think there's a significant lack of coverage in standard policies from the perspective of environmental insurance. So and then the other issue is that environmental policies tend to have meaningful premiums, and if you can round an account out with a policy that's got a minimum premium of several $1,000s versus rounding it out with an endorsed coverage for $100, I think it makes a little more sense to try to focus on a broader, larger type of opportunity to build that account. So why bring up the exposures? And I think this is an important thing to think about, and kind of ties back into every agency's strategy for how they add value in this business. I think it's typically very difficult to discuss environmental exposures with insureds because it's a situation where the existing policy may not be providing much coverage, and it's something that makes it hard to talk to a client and say, well, we've brought this up before, it's something we've discussed, but you all need to take a deeper look at this, and that can be hard sometimes. I think today's market requires agents to go that extra mile. I think professional commercial insurance agencies and brokers have a responsibility to their clients to provide them with important information. One of the things that every time I do a presentation like this, I inevitably get to a point where I realize I forgot to put something in there. And one of the things I did want to talk a little bit about was just the risk management role that every agent has with their client. And I think everybody in one way or another has a responsibility, whether it's sort of as an advisor or as a counselor to your insured or whatever it might be, to provide a varying degree of risk management services. And I think identifying risk is one of the most important components of that. So the insured is informed about where they have exposure and then what their options are as far as avoidance, minimization, and obviously transfer through buying insurance. But I think it's a very important thing for insureds to understand that you're doing that with them and that you're helping them assess the risk that they have, and having frank conversations with them about where they do and don't have coverage. It's definitely a case of, if everyone has an environmental exposure and only a certain percentage of people are buying coverage, then that means everybody else is self-insuring that risk. And I think when you have that type of conversation with an insured, it's a little bit eye-opening for them to realize that they may in fact be self-insuring a risk that they didn't really understand they had. Bringing up exposures also demonstrates the professionalism of your agency. It clearly, I think the hard conversations are the ones that in the end are the most appreciated by the insured. Generates more revenue for the account, which is a good thing to do. Certainly makes accounts more difficult for competitors to take away. In all the years we've been doing this, I think that's the most consistent feedback we get from our agents is that having an environmental line of coverage for an insured has really knocked some of the competition to the side because they couldn't replicate that coverage or they couldn't find it in as effective a way as they our client or our agent had. And I think that's a really important thing to keep in mind because it basically helps solidify and broaden that relationship on a lot of different levels. And it obviously helps with agency E&O issues. I mean, nobody wants to be in a situation where there's a claim and in retrospect realizing that there was coverage available and affordable in the marketplace. And I think that's one of the big myths, and again, I'll touch on this a little bit later, in our industry is that environmental insurance is too expensive and too hard to get. And that's just not the case anymore and hasn't been the case for an awfully long time. So anyhow, so one of the really key things I think to looking at your book of business and to ultimately getting your insured to understand why they have this exposure is understanding what a pollutant is from the perspective of the policy. The biggest thing we hear back from agents who are talking to their insureds is, well, I don't deal with contaminated material, or I don't use hazardous substances, or I don't have I'm not a pollution contractor. And that's not really the point. The point is what the GL policy excludes under the pollution exclusion. So exclusion F in the policy basically defines a pollutant in the way I have up on the screen here, which is a pollutant means any solid, liquid, gaseous, or thermal irritant or contaminant, including smoke, vapor, soot, fumes, acids, alkalis, chemicals, waste, etc., etc. So ultimately, anything that fits that definition will be treated by the general liability policy as a pollutant. And when you sit back and start thinking about it, there are a lot of things that can be irritants or contaminants. Years ago, we had an account where it was a street and road contractor who had a claim from dust from their where they were grading for a new highway, and the dust floated over and covered a house nearby. And the woman in the house filed a suit against the contractor, and the GL carrier excluded that as a pollution loss because they defined that dirt, that airborne dust, as an airborne irritant. And so they excluded coverage. We recently heard of, well not recently now, but a year or two ago, heard of a very large claim in South Carolina where runoff from a new construction job site, silt basically, ran into a neighboring property's backyard, flooded their ornamental koi pond, and ultimately cost the contractor over $700,000. That was a pollution that was excluded by the GL carrier as a pollution condition. So it's very, very important to get insureds out of the mindset of I need to work with I have no pollution exposure, I don't work with pollutants, and get them to realize that the exclusions in the policy relate to very general things that are effectively in the wrong place. One of the very first pollution claims I ever heard of was a milk claim, where a truckload of milk was dumped into a stream and there was a significant fish kill from it. And so too much of anything in the wrong place could be considered a pollutant. So I think once they start thinking that way, they start understanding that it's a little bit different than they might have thought. So there are really a couple of key types of environmental exposures, and then obviously there's lots of variations on it and combinations of it. But the most important key components I think to understand are the operational or service-based exposures. And these are exposures generated by operations of an insured, and it will generally provide coverage for pollution conditions caused by an insured's operations performed for others away from the premises they own, rent, occupy, etc. So anyone providing a service to a third party has this liability exposure. The other basic type of coverage type of exposure is location or premises specific. And these are exposures generated by the ownership or operation of a specific location. So it provides coverage for pollution conditions at, on, or emanating from that location. And this is a little bit of a different distinction. Environmental insurance uses terminology that's a little bit different than most agents work with, I think. And the job site exposure really is a contracting exposure as opposed to a location or premises specific exposure. And I make that distinction primarily because in talking to agents over the years, I consistently get asked about site coverage, and what they're talking about is the job site, not the owned premises of the insured. So these are really the two different ways that we break environmental coverage up, operational versus location specific. Types of, or for operational service-based exposures, the policies that typically are looked at are contractors' pollution liability. And this is a policy that provides coverage for pollution conditions caused by operations performed by or on behalf of the insured for others away from their premises. These days it's very often written with mold coverage as an extension of it. It doesn't have to be, and it depends on the operations. And then enhancements or extensions of that coverage, again the contracting type of service exposure, will be over-the-road pollution coverage, and that's to pick up pollution conditions caused by a sudden upset and overturn of a vehicle. Non-owned disposal site coverage, that's an extension that provides coverage where the insured disposes of their waste. Owned premises liability, this is one of the ones that I think is most overlooked and awfully valuable for many insureds. That's the coverage for a contractor's owned property. So one of the things we see a lot of interest in the market right now is if you're writing a street and road contractor, for example, they may own a significant facility where they store their equipment and they maintain it, refuel it, park it outside in the rain over a period of 10, 15 years, whatever it might be, and that piece of property has an environmental exposure as well, and ultimately could be impacted by the long-term use of it, especially for maintenance and those sorts of operations. So enhancing a contractor's coverage by providing an extension for their owned premises where they're storing their equipment is a really valuable thing to do. Products pollution, that's where we're providing coverage for pollution conditions caused by the failure of a product. An example of that would be folks who recondition storage drums, and if that reconditioned drum were to fail and the material in it were to leak out and cause a pollution condition, that's a products pollution type of loss. And then coverage for storage tanks that the insured might have at their premises, underground storage tanks or above ground storage tanks. And there are certainly other extensions and combinations of extensions that can be done for operational service-based accounts. For location or facility-based exposures, we look at things a little bit differently. This is providing coverage for pollution conditions at, on, or emanating from a specific location. It's really, really important for people to understand that these policies only cover those locations that are identified in the policy. And that's a really important distinction to make because lots of site forms or lots of accounts are written with a, here's the mailing address of the insured, this is where they're located, and then you find out as you go through the underwriting process that they actually have 13 other locations that they utilize around the country or around the state. But we've got one address on file and the policy is being quoted on that one location. So it's very important to realize that when writing this kind of coverage, you've got to identify each location that you want insured. It can include coverage for on and off-site cleanup of pollutants, bodily injury, and property damage. It can be written to include mold and is, well, depending on the exposure, often is these days. Some of the common enhancements to those types of policies are a business interruption or loss of rental income, which is an extension that basically says that there's a pollution condition at the site that causes business interruption or a loss of rental income, the policy would reimburse for it. And that's a distinction from the typical business interruption that you sell with your property coverage, in that we only cover it if it's generated by a pollution condition, which is very often not covered by the property form. We can also do incidental CPL. We have lots of accounts where they perform a maintenance service, but they occasionally will go out and install a finished product. We've had people who recondition transformers, and they'll go pick them up, bring them back to their site, do their process, and then deliver them back to the original location again. And so we cover that incidental contracting exposure as well. And then underground storage tanks. Premises-specific or site-specific policies generally don't cover known underground storage tanks unless they're disclosed and endorsed on the policy. They typically cover above-ground storage tanks, and they typically cover unknown underground storage tanks. But again, you have to really look at it and determine what the exposure is that the insured has and how these policies would match up. So taking those, who needs those types of coverages? And the thing to do here is to sort of look at your book of business and look at the types of accounts you work with, and then start thinking about, do they do some of these things? If they do these operational things, then they have these exposures. For contractors' pollution liability, insureds who perform operations away from their own premises where they bring anything that might be a pollutant to a job site. That's paints, solvents, cleaning materials, fuels, fuel in a skid tank. I'll give you an example of one that is a claim scenario we have in our files that we got years ago, where a plumber brought a solvent called toluene to a job site and was using it as part of their construction process on a new residential construction project. Actually took that toluene, and instead of disposing of it properly, an employee put it in a dumpster. Apparently over the weekend, 2 neighborhood children climbed in the dumpster playing around, were asphyxiated by the fumes, and died. And that was a case of someone bringing a pollutant to a job site that obviously led to a horrific claim. So anybody who brings something to a job site that could be a pollutant has an exposure. If you perform operations on a site that might exacerbate an existing condition, so you're doing site work, you're doing, you're grading, you're trenching, you're putting in power lines, utility lines. You're doing anything there that might potentially exacerbate or make worse contamination that's already at a site or is causing contamination at the site. So for example, we had a claim years ago where a contractor was drilling actually a power pole hole and actually nicked a home heating oil return line in the process of drilling his hole for one of the support wires. And it turned out the homeowner, after they paid several significant heating oil bills in a short period of time, realized that they had lost about 1,000 gallons of heating oil into their yard over the last several months. And it was when they went and took a look, figured out that this contractor had literally just nicked the side of that pipe when they were drilling their hole, and so they'd caused a significant pollution problem. We've also seen claims where insureds of site work contractors have been held responsible for transporting contaminated soil around a job site, even though no one knew it was contaminated at the time. But it was later determined that it was, and that contractor was held responsible as a transporter of contaminated waste simply by spreading the soil around the site as he'd been instructed to do. So there is a real opportunity for contractors to accidentally get involved in contamination issues where they might be held responsible. Now, at the end of the day, will they be paying the pollution claim, or will they simply be looking for defense for it? Those are important things to keep in mind. That ultimately, to have an effective insurance program, you certainly want to have coverage so that you can have defense. So going on, their operations may cause a pollution condition directly. Installing piping incorrectly, installing flashing on a building incorrectly. I've seen several claims for window installers who've done flashing wrong, and it's led to mold growth in the building. An HVAC contractor installing ducts improperly. We've seen lots of claims over the years for ducts that have bent at too sharp an angle, causing a place where moisture would and condensation would accumulate in the duct, and ultimately mold grows, and you end up with a building-wide bodily injury property or problem for indoor air quality issues. So, and then of course there's the obvious, completed operations could cause a pollution condition, and if you install a tank and that line leaks over time and you've got a pollution problem, there are lots of things that you can do, even if it's going in and trying to fix a leaky pipe in someone's house, and the repair ultimately doesn't hold up, leading to a pollution condition and potentially mold growth in the building. So operationally, from a contracting perspective, there are lots and lots of ways that an insured can have an environmental liability that it would make some sense to try to cover. Oops. Oh, here we go. Premises pollution liability. This is for insureds who own a property, and the exposures will include insureds who any sort of repair or manufacturing or service work performed at their location where they're going to use oils, solvents, fuels, maintenance facilities for trucks, heavy equipment, etc. Insureds with neighbors that might contaminate their site are certainly great opportunities to look at for premises pollution coverage. You certainly would hope that neighbor could be responsible in the event they impact your property, but the reality is that sometimes that doesn't work out that well, and it's a whole lot better to have your own insurance policy respond to your own issues. Insureds who lease to entities that might contaminate their site, we do a great deal of coverage for this. These are property owners who are leasing their property out to various tenants that they are concerned might have a pollution exposure. We've seen people do it when they've had restaurants in their building. We've seen people require it when they have T-shirt shops in their building, printers, any sort of light industrial kind of commercial application certainly is an opportunity. And then insureds concerned about unknown pre-existing conditions at their site. If you have an insured who's got a piece of property that they've either recently purchased or are concerned about historically, we can take a look at providing coverage for things they might not be aware of. Also added to this that I don't have on the slide is folks with a habitational type of exposure. We do a lot of coverage these days for senior care centers where indoor air quality is a significant concern, hospitals, medical offices, facilities like that. Office buildings are buying premises pollution much more frequently now than ever in the past. And the concern there is third-party bodily injury claims for just indoor air quality. And there are lots of claim scenarios we have available that show that one problem in the ventilation system in a building can lead to a pretty expensive loss as far as the people in your building not being able to come to work. So there are lots of folks who have this premises exposure, and again, it's a matter of determining how significant it is, and if it's something they want to transfer through a risk transfer mechanism, or if it's something they want to self-insure. But that again is a discussion I think every insured needs to have. So examples of risks for contractors' pollution, some of these we've mentioned: grading and site prep contractors, roofing contractors, certainly with a mold extension for contractors' pollution liability. We see lots and lots of those now. Plumbers, HVAC contractors, and other mechanicals are often buying this kind of coverage. Window installers, general contractors, electricians, really any of the trade contractors now, we're seeing a significant flow of that business coming in. Premises pollution, warehouses, contractor yards, manufacturers, light industry, hotels. We've written a number of hotels over the years that have had really interesting histories as far as indoor air quality issues. Doctors' offices, retail properties, developers now are getting much more concerned about the long-term ramifications of the environmental impact of their property, whether it's, is the land going to get contaminated during the construction process, or is a future homeowner going to come back and say there's an issue that would stem from the development process, or are we going to impact third parties off of our premises? Those are all things that we can look at as far as addressing the environmental exposure they have. apartment buildings, hospitals, et cetera, et cetera. So the list is really as long as your book of business, frankly. Almost every one you look at is going to have some degree of exposure either on their service side or on their premises side. These are some example scenarios of things that have led to pollution problems for risks over the years. And just real quickly, people who go in and retrofit aging electrical systems that require proper disposal of PCBs, property damage or BI caused by mold growth from water damage, interruption of electrical power, servicing emissions equipment can lead to airborne toxins being released. Installation, retrofitting, or repair of equipment may lead to a disturbance of asbestos-containing materials, and the list goes on and on. There are just lots of everyday events that contractors get involved in that can ultimately lead to pollution conditions. They can be significant. One of these pollution conditions for stormwater or groundwater collection during excavations. We've seen a lot of stormwater runoff related issues in the last year or so. It's becoming a bigger concern for a lot of municipalities, I think, and a lot of contractors are being held to a higher standard as far as that, as well as silt runoff at construction sites. Very, very significant claims coming in on those types of accounts, and we're definitely finding more interest from contractors in purchasing that coverage. So one of the things that I get asked a lot, or that we talk to our agents about a lot, is how do you actually talk to your client about this, and how do you actually get your client to get comfortable with the fact that this is something they really ought to look at. And I think that the beginning of that is really talking about the increase in the profile of the exposure now. 10 years ago, I think not a lot of people in the general public were as aware of and as concerned about the environmental impacts of the people doing business around them. I think contractors and consultants in general, there wasn't an expectation that people were going to be responsible for their impact on the environment to the degree there is today. If I had to say the number one driver for non-environmental risks buying environmental coverage, it's certainly contract requirements. Almost every job you're seeing is requiring some degree of pollution coverage from the contractor. And some of them are services that really, there is no specific environmental concern in what those people are doing, and they're still being required to carry fairly sizable limits of pollution coverage. So, and a lot of that flows back from an increased awareness. The days of people in the public not really worrying about it are gone. So the other thing I think is an early good conversation is just that coverage is much more affordable and easier to apply for and broader than it's ever been. Environmental coverage today, in my opinion, is significantly broader coverage than it was 10 or 15 years ago at a fraction of the cost. There are a lot of carriers in this market right now. There's a lot of competition for business, and there are a lot of very credible programs that offer very good coverage from very well-respected, well-rated companies with great claims-paying histories, and it's very affordable to purchase. So it's that used to be the number one thing people would say about why they didn't consider it, is because it was too expensive, and on some levels, unfortunately, it's not. It's become very affordable. So, and then the other thing, obviously, is to start talking about highlighting some of the exposures and just really having that conversation. I've gone with agents to meet with clients before, and I met with one years ago, and went into a meeting with them, and the insured said to me and to my agent I was with, said, I appreciate your coming all this way. I just want to let you know I have absolutely no interest in buying anything you're going to talk to me about today, but it'll be fun to talk anyway. And I figured initially we were going to be out of there in about 15 minutes based on the introduction, and we were there 2.5 hours. And once we started talking about the things that he had at his site, and he was a contractor with a significant yard and site exposure as well, And we started working down that list of things, and he just kept talking to his agent saying, well, am I covered for this, and am I covered for that? And my poor agent sat there shaking his head saying, no, we've talked about this, you're not. And it was a really interesting experience because he brought up things and started talking about things I never would have imagined would be a concern, but he was very aware of what his exposures could be once he started realizing the limitation of what he already had. So tough conversation for the agent, but a long-term client that I think he still writes to this day that now buys pollution coverage. So it can definitely be worth doing. So overcoming some of the common hurdles, and these are things that again we've run into a lot. Some of the questions that I think our agents are getting asked and they're telling us about are, insureds who basically say, well, my general liability policy should cover everything. So, and that's really not the case. I mean, certainly, as we all know, the ISO-GL form with an unmodified pollution exclusion does provide some pollution coverage. There's no doubt. But there are very few of those around anymore, and what we see far more often is GL policies with absolute or total pollution exclusions that really effectively take it all out and give you no pollution coverage whatsoever. So I think it's awfully important to if you're presented with this argument, to be comfortable with what forms are on that GL form and be able to highlight the limitations and talk about the limitations in exclusion F because they're significant. There's a little bit of coverage there, but there's not a whole lot. Another one is that the insured doesn't think they have a pollution exposure. I think the answer to that is what we've been talking about. Inevitably there is a pollution exposure. I think the question is how large it is and how significant it is, and if it's something that the insured then wants to transfer through an insurance policy. And again, that's got to be a discussion about what are the exposures really, what can they be held responsible for really, how important is defense to them, that sort of thing. So another one is I don't deal with hazardous materials, and as we just said, I think the important discussion there is that that's not really what the GL policy is excluding. It's excluding substances that effectively don't belong where they are, and that's a much broader bucket than just dealing with chemicals. So I think that's an important thing for them to begin to realize. Never had a claim before is another hurdle we hear from people. And I think that's wonderful. I love writing insureds who've never had claims before. It's kind of funny. In this day and age, it's becoming very unusual to find insureds who don't know someone who's had a claim, a pollution claim. It used to be the case that not really anybody, hadn't happened to them, hadn't happened to anyone they knew. But these days, if it hasn't happened to them, it's happened to somebody that they know of at the very least, if not someone they know well. And I think that's creating a much better informed client base than we've ever had before. So not required to carry it. That is probably true. I would tell you again, as I said a little while ago, from a contract perspective, we see these requirements all the time. It's kind of hard to imagine any contractor that's doing a lot of contract-based work is not doesn't have that requirement in that wording somewhere. Whether they've realized it or not is obviously another story. But just because they're not required to certainly doesn't mean it's not a good idea. So I sub out most of my work. Contractors' pollution policies typically cover work performed by or on behalf of the insured, not just work performed by an insured. Now there are some exceptions to that, and one of the important things about working with this coverage is really understanding the forms that you're working with, because they are not all created equal. So you'd want to look at that, but the majority of companies that I know of will cover work performed by or on behalf of. So that's an important thing for them to realize. Last couple, it's probably too expensive. Contractors' pollution policies typically now are down at around $2,500 for a $1 million limit of liability. It really can't get a lot less expensive than that. I think it's gotten to the point now where, when I started doing this 23 years ago, minimum premiums for pollution policies were in excess of $100,000 per line of coverage you purchased. And so in those days I could understand the argument that it's too expensive. I think I think these days, you know, you don't even have to have a part of a claim to recognize that the $2,500 was money well spent. So, you know, obviously that's a starting price, and that's not what everybody pays by any means, but it is very affordable coverage. So, and then the last one, the chances of something happening in my company are so slim. And you know, again, I hope that's true, and I hope every insured is lucky enough to go through their careers without accidents happening and things occurring. But unfortunately, you know, that is not how that works very often any longer. And you know, the odds of something happening, whether you're responsible or not, and whether in the end you're held responsible and pay or not, are just growing, you know, exponentially. And having defense is an important part of having an insurance policy. So. So some of the details on how to get this coverage, how much it costs. Contractors pollution minimum premiums are as low as $2,500. You know, limits start at $500,000 and go up easily to $5 million without too much trouble. Contractors pollution is often offered on a claims made or an occurrence form. You see a lot more occurrence coverage these days than you used to. There are still some that are hybrids, which means that part of the policy is on an occurrence form, but maybe the mold coverage is on a claims made form. You've got to be incredibly careful working with those policies. There is a wonderful opportunity to drop or mess up retroactive dates on claims made coverages. So, you know, if you do start working with those, you know, be sure you're very, very comfortable that what you're selling your insured matches up with what they've had before and what they're doing. Premises pollution policies really can start as low as $1 million for some limited, or I'm sorry, as $1,000 for some limited policies. In terms of what they cover, you know, you can buy premises pollution policies that are really storage tank policies. So, and the minimums for those are even lower. So, it can be a very finely written policy that covers just the exposures you want to. Limits again start at $500,000 and go up from there. Premises pollution policies are, in my experience, always claims made. You know, again, you'll want to be careful about working with expiring coverage and new coverage to make sure you match that up right. And retentions on that start at about $5,000. So it is very affordable coverage these days. Submission requirements for general contractors pollution policy. We need ACORD applications, just the applicant info in the GL sections. Loss experience, and then if they want mold coverage. Carriers will have their own applications that they'll want completed if you're getting ready to bind with them. But with this information, we can get a good understanding of what your insured does and get information, you know, hopefully get enough to get you an indication on that account. The most important thing to share with whoever you're working with on this coverage is what the services are that your insured performs. And how much revenue is derived from those services. Pollution coverage is almost universally written on a revenue basis, not a payroll basis. And those services are what feed rating models. So if you've got a contractor who does some industrial cleaning and they do some truck washing and they do some other stuff, we really need a breakout of what those operations are. Carrier specialty applications in the environmental sector all have those tables that you can then fill in. So if it's at all possible to get a pollution app completed, it's a good idea. But again, when you're working with a non-environmental contractor looking for CPL, we can generally start with a little bit less than that and then work from there. For premises specific accounts, it's a completed site application, a good narrative of what the coverage is supposed to accomplish. And I say that primarily because there are so many different ways you can craft site pollution coverage, and there are so many different exposures you can either cover or choose not to cover, that it's really important to have you know, a good idea of what you want to accomplish. And then copies of any environmental information that's been performed on a site, whether it's a phase 1, 2, or even a 3, any kind of surveys that have been done, anything like that that would help the underwriter get comfortable about the environmental exposure a site might have. And then site-specific coverage for underground storage tanks or above-ground tanks if you're looking for those. Most carriers require a completed tank application because they ask very specific questions about the age of the tanks, the construction of the tanks, the contents of the tanks, what kind of monitoring is being done, what kind of secondary containment is in place, that sort of thing. So you'll want to just start with the right application for that kind of coverage because it'll get you much better information back from the carrier much quicker. Where do you go to get a quote for this type of coverage? Lots of direct writers. There are in excess of 40 markets right now offering environmental coverage, and they really run the gamut from direct companies to wholesale-only companies to MG8 programs. There are a lot of different products and ways to do it. But from a direct carrier perspective, there's AIG, there's XL, there's Zurich. There's a handful of people that you can go to. There's pros and cons to all the different mechanisms for finding coverage and finding out information. Some of the pros, from my perspective on that is, direct access to an underwriter to tell your story, which is a valuable thing to do. You may be able to build on an existing relationship. I mean, if you work with that underwriter and that company a lot on a regular retail level, you may find that you can do well doing your pollution coverage with them as well. And then possible integration of your coverage with the same company. So if you're writing the general liability with someone for a contractor, it's a great idea to try to write the pollution coverage with them as well. One company on both lines is a good way to do it. So the cons to that are, you get what the company has to offer. And then a lot of underwriters, are trained on what's great about their forms, but maybe not so much on what's not great about their forms or what another competitor might offer that kind of account. And so you get what they know to tell you about, but you're getting one opinion, and that's typically how that would work. So general wholesalers are another mechanism. Amwins, Allris, there are lots and lots of wholesalers. Again, the pros in that situation is you're building on an existing relationship. Pretty much every agent I know of does a lot of work with their wholesale broker. NIF in New York. I mean, there's a lot of great wholesalers who really know what they're doing. So there's a possibility of integrating with your coverage for the same company. Again, building on a relationship that you've got with that broker and the market that broker is working with for you. Some of the cons, some general offices don't really have much expertise in environmental. Some do, so it would depend. And then limited market knowledge and access. Again, that goes along with whether they specialize or they don't. Another option is specialty wholesalers. Only name that I could think of was Beacon Hills. I don't know why. I just racked my brain trying to come up with other names. But obviously there are lots of specialty wholesalers as well that focus on environmental insurance. And much like some agencies focus on certain product groups and certain types of accounts. That's what specialty wholesale brokers do is really just focus on this class of business. So you're going to get more extensive product knowledge, better market relationships typically. Most specialty brokers are meaningful producers to their biggest markets, and that helps them work on your behalf to get the best coverage for your account they can. And then tools to help you actually sell the coverage as opposed to just giving you quotes. Cons, sometimes it's a new brokerage relationship for your agency, and that's not always an easy thing to do. Sometimes those administrative hurdles are the biggest ones of all. So what does Beacon Hill offer? And again, this is just us as a representative of specialty brokers, but we have account teams that are focused exclusively on the environmental and energy space. We have exceptional market access and relationships, we think. We have a true understanding of the coverage differences, and one of the things I just mentioned, I mentioned earlier, it's incredibly important to understand the policy you're working with. Environmental insurance is not a standard line of business. The majority of companies offer it on an excess and surplus lines basis. And even when they are admitted forms, they're very often specialty forms created by that carrier. So when you look at a contractor's pollution liability policy from 3 different companies, you're really looking at 3 different approaches to accomplish the same thing. So they all want to provide you coverage for your contractor services, but they're all going to do it differently, and they're all going to do it with their perspective on how it should be offered. And what you'll find as you look at forms is that there are some pretty significant differences, and there are are significant coverage differences that really could matter a lot. And so it makes sense to spend time focused in on a couple of products and really understand them to be comfortable that what you're offering your client is really the most effective coverage that you can get them. So, and that's what we do. I mean, that's pretty much all we do all day. So, dedicated service teams here at Beacon Hill, where we have folks who all they do is service our accounts once they're bound. So we try to do a better job post-binding than we do pre-binding, so you'll be happy and come back again. And then web-based utilities, and a lot of the information actually in this presentation, some of these hurdles to buying coverage, claim scenarios, stuff like that, all of this is available on our website. Our coverage guides are very, very helpful tools. We find people spend a lot of time on those on the site. Common environmental frequently asked questions. We have educational podcasts. We have claim scenarios, a glossary of environmental terms, and applications just all available on the site. So it's very easy to get information. And it's very easy just to get it to educate yourself in your spare time, and when you are starting to think about an account and want to get some information on that class of business, I'd certainly encourage you to visit our site and visit other specialty broker sites too. I think you'll find that there's a lot of good material out there in the market to help you make some decisions. So, how well does it work? Here at Beacon Hill, in 2013, our new business submit to bind ratio was over 30%. Our quote to bind ratio is about 44%. And we've grown 23 straight years. So we're pretty happy with the results as an office and feel like we've figured out a pretty good way to be successful in this class. And there's also just a huge amount of growth in the environmental marketplace. And some of the research I've done, there are estimates that put the overall market penetration of environmental opportunities at 25%, and for environmental risks, so people who are required to buy coverage because they're hazardous waste sites, that sort of thing, estimates have market penetration as high as 75%. But for non-environmental risks like trade contractors and HVAC contractors and all these other folks, there are people who say market penetration is as low as 5%. So that means there are conceivably from $10 to $20 billion of additional premium in this market space available. So there are a lot of opportunities to go out and write business, and a lot of opportunities to grow your existing book of business by adding coverage to it, one policy at a time. So. In summary, it's a competitive marketplace, and getting the most out of every relationship is really the key. It's the key for us in what we do. I think it's the key for for all brokers and all agents out there, is to just maximize those good positive relationships you already have by broadening them and making them as strong as possible. So at this point, what I wanted to do is I'm going to ask Sherry if she would do me a favor and put our last poll question up. And these poll questions are, I'm going to have to read them off here because I can't find my piece of paper. So in the future, our hope is that we're going to try to do something like this on a quarterly basis as an office. And so we wanted to ask you all if you could help us with some thoughts on what you would like to see possibly in future presentations. So we're thinking we might do something focused just on environmental contractors and consultants, more on non-environmental contractors, more on site facilities and other habitational risks, and more on energy risks. So if you could just give us your thoughts on that, I'd appreciate it. And in the meantime, I think I'm going to start reading some of the questions that we've received. And one of them on here was, I actually have to read this real quick. So I got a question on here asking about a contractor asking if a contractor is working as a sub, can the GC that they work for be added as an additional insured to their policy? And the answer to that would be certainly. We're definitely finding that like all contractor-subcontractor relationships, there is a requirement and a hope that they will, liability will be appropriately passed up the chain, and that certainly does happen in pollution coverage as well. Okay, so we just got the survey is stopped. I got to try to get my thing back so I can read some of these. Okay. So we had a couple of questions from folks about the presentation and whether they can get copies of the slideshow and if it's available on our website. So I'm going to actually get Sherry to answer that for me because I'm not too sure what our mechanism is for getting that to you, but I'm sure we can. So, and then I had a question about you know, the process for binding accounts and how difficult that is. And just really briefly, you know, we typically try to get as much information in the beginning of the process as we can because I think it enables us to give you the best quotes back. You know, limited information gets, you know, a broader answer, I guess is how you'd put it. When we get good specific information, we can really zero in on it and get the best terms from the underwriter. So depending on how much we get at the early part of the process will dictate what we can, what we need as far as binding an account goes. But typically, you know, the binding subjectivities will be, you know, the things that everyone needs: a TRIA response, response on how you do, you know, or how E&S taxes are going to be handled, that sort of thing. And then any documentation the carrier still needs, whether it's a signed application or whether it's hard copy loss runs from a prior, you know, prior years that maybe weren't part of that initial submission. So it is dependent on the account, but generally we try to make it as simple as possible. So. And then I also got a question about is contractors' pollution liability typically monoline coverage, or does Beacon Hill write all lines in conjunction with the pollution? Which is a great question, and it depends on the type of account. The markets we work with are environmental markets, and they want to write all lines coverage, or most lines coverage I should say, for environmental risks. So if you were to bring me a contractor that does 50% asbestos abatement and 20% industrial cleaning and, you know, whatever he does with the balance, that would be considered by most of our markets as an environmental risk because the majority of their services are in an environmental category. And so for that account we could write general liability, contractors' pollution liability, probably professional depending on their exposures. And then some of our markets can also do supporting auto and workers' comp depending on the account. And then all of our markets, can also do excess liability. So we'd be able to do that for those types of risks. Now if it's a roofer, for example, and that's what they do is roofing, then no, we would only be able to do the contractor's pollution on a monoline basis. So it's really going to depend on the fit of the account as much as anything else. So, and let me see, another just popped up here. So I had a question about premises liability for financial institutions, and specifically you know, banks or lending institutions that are focused on commercial lending. And we have certainly seen a lot of growth in that area. You know, there is a significant risk for commercial lenders in the environmental health of the property they're lending money on. And over the years there have been a number of different products that have been used and have been in the marketplace to try to address that exposure. And what we found over time is that it can be done on a case-by-case basis, or it can be done on a portfolio basis where we try to write a policy for that lender that effectively picks up their ever-changing book of properties. So yes, you can certainly look at coverage that way. And I think there's, as with everything else environmental, there's a growing awareness. And you know, these days you don't have to look far in the press to hear stories about environmental impacts and problems happening that have led to significant expenses for insureds. So I think we're actually out of time at this point. So I wanted to ask Sherry if she could jump back in.
I'm here.
Oh, okay, great, thanks. And I just wanted to thank everyone for joining us today and for participating in this and for your feedback. And thank you again for the opportunity to talk to all of you.
All right. Thank you very much, Bill. On behalf of Beacon Hill Associates, I'd like to thank each of you for attending today's webinar. This concludes our program.